Hi everyone, so let's talk about currencies, and we're going to start off with the Australian dollar, which had a nice little bump up here. So I changed this channel slightly. I'm not a big channel person. I put it on there for kind of guidance, and so I changed it slightly so as it hit this node here. And what that done was it actually lined up with this low and this low, right? So it seems significant to me. As well as that, we got 5 waves down for what looks to be a C, and very strong RSI divergence on the Australian dollar. A low could be in. That does not mean go and chase it. That means let it play out. We'll buy a wave 2 pullback if that's what it is. With currencies, yes, the most important thing that happened this week was some sort of negotiation is going to begin between China and the United States, and that's extremely positive for risk assets globally, specifically in emerging markets. Australian dollar, Canadian dollar, these are currencies that are very much affected by emerging markets because they're also affected by commodities. These countries are rich in commodities. They export an awful lot of commodities. 54% of exports from Canada is petroleum or petroleum related products. Australia, $195 billion is commodities. So it's very sensitive to commodities and risk assets. And if a deal is done, the Australian dollar is going to rip higher. So my view is we're in a WX and we still got a Y wave to go higher. Or this could be an ABC, right? A 3, 3 and 5 waves up here for a wave C. So we'll just have to wait and see. But anyway, our ultimate target would be 0.83. Now, as Warren Buffett says, it doesn't matter about the first 10%, doesn't matter about the last 10%. We're looking for this chunky bit in the middle, and that's all we should care about. So although this is off the lows, this is not what we should be looking at. We should be looking at a pullback, and then we'll rally up. If we zoom right into the 1 hour chart, as you can see, 1, 2, 3, 4, and we're potentially in an extended 5th wave here. So that's 5 impulsive waves on the 1 hour chart. From there, we'd expect a 61.8% Fibonacci at least, but how the wave structure breaks down will give us a definitive area to buy. And that's where we buy. We don't care about this first rally. We just want a higher probability entry, right? So we get 5 waves up, 3 waves down, and we'll buy that. It's in a perfect area. We're getting closer to a trade agreement. The dollar itself has got massive long positions. If you look at bonds also, they've got a massive short position. And you should start to see bond yields, the bond spreads globally come closer together. And in that environment, the dollar should weaken. So that's what we should be looking for. Australian dollar to roll over, buy the wave 2, and then shoot higher. The Australian dollar is probably closer to a low than some of the other currencies. So keep that in mind. And that brings us over to the euro. And so for the euro, I'll tell you the view that an awful lot of other people have. They look at this as some sort of A, B, and 5 waves up here for a C. I don't view it that way. I view this as some sort of flat correction for a wave 4, and then 5 waves down, which I can count 1, 2, 3, 4, 5 to complete off a 5th wave of C. Meaning we should start to see some sort of move higher here. I think we're in an A, a B, and a C because I don't think Europe is that strong, but I think the euro still has upside strength based on convergent monetary policy. So 5 waves up here for an A, and I'm counting this as an A, a B, and a C. Very extended C wave, but it still fits. The reason being is, if you look at this A wave here, 1, 2, 3, it's not impulsive. I can't count that as a wave 1 because it broke down in 3. So 3, 3, and then 5 waves down. I'm assuming that this is all corrective and that we've got higher to go on the upside. Where are we in the short term? So we recognized, closed out the position very, very fortunately to be up 1.33%. We were looking for a low, for a good move up to 130. It didn't happen right away and we were fortunate to get out. What actually started to develop was an ABCDE wave 4 triangle, and then it started to break down. From the end of the E wave, you should expect 5 waves down for the final 5th wave of C of B. So let's zoom in and have a look at what we can see. So there's the end of wave E. We have a wave 1, wave 2 pullback, back into test the other side of the triangle. And then we dropped 1, 2, 3, 4, and 5 to complete a wave 3. And then from there, we're rallying up for a wave 4. That can go up to the 50% Fibonacci retracement, which I think it will. I think it'll push all the way up to 1.14635. And from there, we should see a drop of equal length to wave 1. Now, previously I thought it was going to be a 38.2% Fibonacci retracement, which would bring it in a little bit lower, meaning my prior target was lower again. However, my target right now is a little bit higher than where it was before. I think we can drop into 1.125 for a buying opportunity. What you want to see is strong RSI divergence, which we've already seen between these two waves. So we'll just have to see how it plays out over the next couple of days, but ultimately the pattern is telling us that we need to see one more lower low. We have no deal done between China and the United States, just talks, and next week the Federal Reserve come out. So there's an awful lot of headwinds and risk in this currency for us to dive in, so that's why we're going to take a step back and sit on the sidelines for right now. So next we have the British pound, and similar to the euro, I think we're in an A, a B and a C, and we've got much higher to go. So 3 waves down here for an A, that's very clearly corrective. 3 waves up here for a B, and then we should see 5 waves down. So I think this was a wave 1, very shallow wave 2, and then we've got a wave 3, messy wave 4, and I've slightly changed the lower time frames sort of to fit the same pattern that the euro is, because they typically move lock and step, not perfectly correlated, but definitely in the right direction. So when we zoom right in, what I've changed here is the wave 3 ended here, and I think what we have is 3 waves up here for a wave A, 3 waves down for a B, and then some sort of 5 wave impulsive for a C. And from there we've got a wave 1, wave 2, and then 5 waves down here for wave 3, 1, 2, 3, 4, 5. And this is sideways consolidation. This is in no way impulsive. So I'm comfortable suggesting that we go up, back test this resistance level, make one more lower low, maybe even a double bottom for a final 5th wave, and that's where we should complete off and look to buy. Although on the lower time frames we've had good solid RSI divergence, on the daily charts it's way overdone. As you can see here, RSI is way oversold. So what we'd like to see is this continue grinding higher, come back down, RSI divergence, and rip higher. That's what we should be looking for. And so for right now, let's see what happens. But ultimately, this is going to be a trade up to 1.52, right? So got stopped out first time. I'm not too worried about that, because once the move starts, I believe the risk to reward on this trade, if it plays out, is about 9-1, right? So even though we lost once, it pays for 9 losers if it plays out as we expect. And as I said, I've got good conviction that it will play out. For right now, need a lower low, need a better area to get in, and once we get that, then it should be fine, it should be plain sailing. But as I said, we need to see more information and more details on this trade deal before we can consider anything else. So moving on to the Canadian dollar, and as you guys will see from the commodities update, I still think oil has a lower to go. It's following the pattern perfectly that we set out a couple of weeks back, and we're in a wave 4 pullback. That's why it's rallying. Canadian dollar, I'd say a lot of it had to do with sentiments around the idea that China and the United States were meeting. The Canadian dollar rallied 75 basis points against the US dollar. And as I said down here, I think the risk is to the upside, and so far it's grinded higher. Big drop yesterday, but I wouldn't worry too much about that. If crude oil is going to drop to $62, it's going to put a headwind in the Canadian dollar. As well as that, if you look across the board at the euro and the Great British Pound, both of those currencies look like they might make one more lower low, meaning that the dollar might strengthen a little bit broadly. So if you have broad strength in the dollar and you have a weak commodity price, this should continue pushing higher. Ultimately, the pattern would complete around 134, and that's what we should be looking for a short. From there down to 116, with the crude oil price going to $83 a barrel. So that's the expectation with the Canadian dollar. It's 1.345 or nothing. That's what we should be looking for. And in the near term, this is all going to be noise. And that's why I'm sitting very, very patiently right now, because there's going to be an awful lot of noise. That's one of the reasons why I closed my S&P 500 position. The noise is going to be toxic over the next week or two, and your emotions are going to be flaring up. Likely a lot of people are going to get their stops hit as well. Let's wait till the path comes clear, and then we'll make the decision. I still believe the equity markets are going to roll over in a big way, and I still believe that Raul and Mo are absolutely correct to be in the semiconductor space. I've even added to that myself. So that is my view on the Canadian dollar. Let's wait for a little bit more upside before we start considering to short this. Over to the Japanese yen. So in the near term, anything can happen. Equity markets can continue pushing higher a little bit. That is entirely possible. Sentiments can flare up. As I said a moment ago, that's why I closed my S&P 500 position. With the Japanese yen, if the equity markets roll over, my bias would be to the downside. It typically rolls over in tandem. One thing I'll say about this though is we're back testing the breakout, and I would expect, based on a chart pattern alone, and that's why I'm not trading this, based on a chart pattern alone, we should see a 5th wave higher up to 115 is where I'm looking for, and that would make this C wave of equal proportion to the A wave. So I'm not buying this weakness just yet. If this rallies up, you also have the carry trade reinvent itself, and that would basically what the carry trade is: you borrow in yen and you invest in US dollars and you make the difference, right? So there's a massive difference between bond yields in the United States versus what's in Japan right now. So you can make an awful lot of return pretty much risk-free at the moment. Now that changes quickly, so you're going to be careful. And only big investors can really take advantage of that because they have access to that kind of capital. So if this starts to push higher, you have potentially the carry trade back on, and as I said, it could support equity markets. So for right now, I'm unsure of the direction. So we'll just have to wait and see over the next couple of days. We're not in this position. We shouldn't be in this position. So we'll wait and see what happens before we even start to consider buying it. And so this is the last currency that we're going to look at. We only look at the 5 currencies. If you guys have other currencies that you want me to look at, absolutely, I will 100% check the chart pattern. I happen to believe I've got good conviction on these 5 currencies, so I only stick with these 5 currencies normally, but I'm okay checking other chart patterns. But do understand that when I look at it, it's only a chart perspective. If you guys have any questions on what I said today, please do reach out. I'd be delighted to hear from you guys. Or if you guys have any opposing chart patterns, I'd love to see them. I'd love to see if you guys could challenge what I've put out here today. That would be fantastic. With that said, have a wonderful day, guys. All the very best, and I'll catch up with you guys soon.